How's it going, everybody? It's Stas here. So like you all saw in the title, we're going to break down some stocks today. What else is new, right? This is a stock market channel after all, and we're going to go over what I'm thinking about when it comes to the markets, what I'm looking out for these next couple of days, and we're going to discuss why the markets are selling off a bit. Well, at least tech. Why is tech selling off today? So if you guys find value, hit the like button. Check out my Patreon down below if you want all my buys, sells, call outs, morning update videos, plus more. That's on Patreon, link down below. And with that being said, let's get right into the video. So it's currently almost 1 p.m. on the East Coast, and we're seeing a mixed signals in the markets, right? We have the Russell, the small cap index. It's up about 1.6%, so great day for the Russell. The Dow is hanging in there. The Dow's up almost 100 points, up 0.3%. But when you look at tech, the tech-heavy index being the NASDAQ 100, tech is down 1.2%, and the S&P is down about 0.4%. So there's a reason behind the madness here, right, guys? So what is going on? Treasury yields. The 10-year Treasury yield increased on economic optimism and inflation fears, briefly topping over 1.5% on Monday. And get this, guys, that's the highest since June, and it's up from 1.3% at the end of August. And if you guys didn't know, tech stocks are seen as sensitive to rising interest rates because higher debt costs can make long-term growth less attractive to investors. And pretty much when the bond yield goes up, which is essentially a risk-free rate of return, even though it's a crappy return compared to what we're seeing with inflation, but that's a whole different topic from for a whole different video. But when you're seeing the bond yields go up, people are like, why am I taking all this risk in these crazy high growth tech stocks that aren't making much money now? A lot of their earnings are pushed into the future. Why am I taking this risk in these tech stocks? I might as well get that higher. Well, it's not really high, but it's increased since the end of August from 1.3 to 1.5%. I might as well go and get the 1.5% return. So that is why we're seeing a little bit of a sell-off in tech because we're seeing the Treasury yields go up a bit for the 10-year. You know, that's a pretty decent sign, at least if you're in bonds, which, I mean, I'm not in bonds. I'm not going to lie to you guys. I'm not in a single bond, and I don't plan on ever being in bonds, at least in this current environment, considering inflation's pushing 5+%. That really means essentially bonds are worthless. You know, if you're getting in a 10-year bond, you're locking your money up for 10 years at a 1.5% return per year. I mean, that's really nothing. It's nothing. It's really nothing. You're losing money essentially. But again, that's a whole different topic for a whole different video. So that's why we're seeing tech fall today. Again, the NASDAQ 100 being down about 1.2%. We have a lot of these big tech names getting hit. Adobe's down 3%. Nvidia's down 2.6%. Apple's down 1.3%. Google's down 1%. Amazon's down 1.7%. A lot of these big tech giants are getting slammed today. And I'm looking forward to Jerome Powell. Believe it or not, Jerome Powell is speaking twice this week. Fed Chairman JP is due to speak before the U.S. Senate on Tuesday, being tomorrow, and then at the European Central Bank Forum on Wednesday. We're going to be looking at whether or not he's going to talk more about inflation, economic policy, the reducing of the bond buying program, which who knows, I doubt he's going to say anything new about that. But that is what investors, traders, everybody from institutional investors, retail investors like you and I, that is what we're looking for when it comes to Jerome Powell speaking on Tuesday and on Wednesday. And that's probably going to fluctuate the markets a little bit, especially if we get to hear something that wasn't said in the Fed meeting last week. I mean, if it's all the same stuff, I doubt the market's going to move. But if he drops a bombshell, he says something crazy, something different, then yes, the markets are likely to move. But we'll see. I mean, I doubt he's going to say anything new. But that's just me, right? I could be wrong. I've been wrong in the past. I'm not some kind of wizard that knows everything. So let me know your thoughts, guys. Drop me a comment down below. And I have a question for you all. do you invest in bonds? Do you have any bonds? Let me know in the comments. I guarantee most of you out there don't, but if you do, let me know in the comments. Are you in bonds, or are you holding cash, or are you in the stock market, investing in stocks, dividend-paying stocks, whatever? Let me know in the comments, and let's go over now a couple of stocks that I'm looking at that are pretty beaten up, starting off with AMD, and let me show you all a new discovery that I made today on the 20-day chart. You guys can see I'm seeing a breakout. First and foremost, we're trading above both moving averages on this 20-day chart. We're noticing a golden cross as well. The 50's crossing above the 180 SMA. And we're noticing an inverse head and shoulders forming. The left shoulder, the head, the right shoulder. We held the neckline at 103 like clockwork. We ripped above it today. And pre-market, we sold off a bit. So a lot of this run-up came as we dumped pre-market into market open. We got to 103, then we rallied all the way to almost 108. That was a move of 4%. So today's big move from market open to where we are now has been the start of the right shoulder in the inverse head and shoulder pattern here on the 20-day chart. So this is looking pretty good to me for a reversal to the upside, right? Considering it's super oversold on the 4-hour chart. You guys can see that as well. It's gone from 122 down to about 99, 100. Now it's recovering to 107. And I think if it starts breaking out, which it is slowly but surely today, if it starts getting out of the 180 moving average here on the 4-hour chart, this gold trend line, which right now we're fiddling with it, if we break out of there, you better believe that that inverse head and shoulder will complete anywhere from $110, $112, $115 per share. That is where I think it's headed. So I'm going to put my alert on this at 107, maybe 107.50. We'll put it at 107.50 for now. If it gets out of there here on the 4-hour chart, we break the 180 moving average. Then going back to that 20-day chart, we're going to be full on ripping towards 110 plus, in my opinion, right? And as always, you guys must always do your own research, always do your own due diligence. This is all for my opinion and for my understanding, research, technical analysis, and experience, right? So keep your eyes on AMD. And full disclosure, I don't own AMD anymore. I did own it at 77, sold it at 118. All you guys in my Patreon know that, which again, you can check that link down below. And since I sold out of it, I've been looking for a re-entry, and who the heck knows, this might be the re-entry point. So AMD, solid. DraftKings, I do own, full disclosure, I do own this one as of Friday. I bought back into this. I bought back in at 51.60. Now we're trading a bit lower at 51.14, and I will be buying more, especially if this starts to head under 51. $50, 48, 49. That is where I will be buying more DraftKings DKNG for sure, right? Because I only put in about 10-15% of my goal position, maybe 20% on Friday, knowing that it could go lower, which it has gone lower because, again, I got in at 51.60. Now it's at 51.16. So, yeah, I mean, I think this sell-off is a bit over-exaggerated. Excuse me, guys. It's down about 20%. It's in a bear market, and it's a bit over-exaggerated in my opinion, right? You know, we're holding the uptrend as of now at about $50. Previous low was at about 42. Before that, it was 39. So I think this, you're going to need some patience considering it's really not reversing yet. Hence why I only put a little bit in for now. But if we start recovering 49, 48, 50, I don't really see it going much lower than 48, to be honest, guys. I mean, if it were to go lower than that, I'd be surprised. But it could. But honestly, I'm leaning more towards consolidation, 48 to $50, $51, followed by a rip back up to the mid-50s. So I'm in at 51.60. My goal is to build a position at about $50. That'd be nice. And then I might consider getting out, whether it's 56, 57, 60. You know, that would be my goal target here on DraftKings, which really puts it near the highs from, June, a little bit back here, and August, September as well. So watch out for DKNG. Upwork, is another one which overall in the grand scheme of things is oversold from $64. Now it's at $48. It's down about 30%. It's in a bear market. And now recently today, it's down 4% today, down 2%, or $2 rather on the day. And you're noticing we're getting a much-needed pullback because last week we had a huge breakout above both moving averages on the 4-hour chart. We got to about 52. We got a bit overbought there. And now we're pulling back towards the moving averages. In my opinion, this could be a dip buy. It very well could be a dip buy. I might end up adding this one after making this video. The chart looks really good. We're seeing a golden cross, 50s above the 180 SMA here on this time frame. And you know, we're consolidating slowly but surely above the moving averages. So I like this dip on Upwork. I'm probably going to buy a little bit here after this video, put some cash to work because I actually got out of my SoFi today. So I got a bunch of brand new cash waiting to rock and roll. If you guys remember, I was in SoFi at $14.86. I sold some covered calls against it that expired on the 1st of October at $17. And I actually got out of those calls. I timed it perfectly today, guys. I got pretty lucky, I'll be honest. I got out of those calls at what was it? I sold them for 41 cents per contract, received that in premium, and then I bought to close at 52 cents a contract earlier today. So I took a loss a little bit on the premium, but I got out right before this took off from about 17.10 to 17.89. And if I were to wait to get out now, you know, the premium that I have to pay to get out of the contracts would be a lot more than the 52 cents that I paid. So I kind of lucked out a little bit. I got out of the covered calls, right? Very slim loss there, no big deal. And then I ended up selling out of my entire position at about 17.70, which more than made up for the loss that I took on the premium from selling the covered calls and then buying them back, if that makes any sense. So now that I did that, I'm out of SoFi, made about 17% on the position in about a month and a half. I am now looking to put that money back to work in Upwork, in DraftKings, looking to buy more DraftKings. And that's what I'm looking to do right now, guys. So overall, let's wrap it up here. If you all enjoyed it, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts down below, and check out my Patreon. If you guys want to keep up with all my moves, whether it's options, selling covered calls, buying calls, whatever the heck I'm doing there, trades, long-term investments, all of that is on Patreon. I'm posting call-outs there, morning update videos every trading day as well. So a lot of work's being put in the Patreon, a lot of value. Check it out. Link down below. Make sure to also get your $30 from M1 Finance, your 2 stocks from Webull, up to $1,600. All also linked down below. And with that being said, that's it. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there, guys. Peace out.